All right, hi everyone again. Ready to start? Yeah, I just did a quick sound check a minute ago, guys. I wasn't starting, I'm starting right now. Sound okay? One more time? All right. All right, welcome to today. I've done this once before, a while back, and probably every couple of months I'll do this. The original intent was a review for seminar, for the letter subscribers. I write a market letter every morning that is mostly kind of a day trading guide, but also gives a longer term outlook. And there's lots of little tips to using the letter I wanted to pass on to everyone, but I figured why not invite everybody in, even if you don't subscribe to this, because there will be a lot of good information discussed. And I also want to go over a little bit of just how the bias and the calls are made and let you get a little feel for the accuracy that's there. That's to some people rather incredible. What I always do when I do any kind of session like this is when I go back, we're going to always look at the last 5 days. I'm not going to go back to some moment in time, in late August when the letter made a perfect call. We're just going to look at the last 5 days. Is what I always do, right or wrong, good or bad, whatever happened. That's what it was, because that's what we want to look at. Is just just a typical thing, not some special day. So we're going to look at the last 5 days. The first part I want to do, though, is go down and take a quick rundown and give tips for people who actually use the letter. And a lot of the people here actually subscribe to it. And that was the first part of it, to give some tips about how to look and how to read and some features of it. And then number two, I'm going to take and run through the last 5 days with you. First of all, just kind of freelance, and second of all, kind of tie it to the letter. Okay, sound good? And then when we're done, I'll take any questions. We'll probably be done in an hour. Plus, I said till 4, but we'll probably be done in an hour. And then if you want to ask some questions, feel free. Okay. So you have a camera up there, and I'm going to drag a typical letter in front of it here. Now, up on your camera settings up on top, you can zoom in or you can make it fill your whole monitor. I suggest you might want to make it fill your whole monitor, like you're watching a YouTube video or something, and then you can see some of the detail a little better, because you probably don't really need to see the comments. If there's any questions, I'll read the comment aloud as well, okay? So this is what the market letter looks like. It's rather long. This is just a PDF of it. That's what you get in your mail, and it's this long. And again, I'm here just to review for the subscribers. Obviously, if you guys wanted to get this, you'd get it already. So I'm not here to sell it. I don't care if you get it or not. But when you start at the top here, the first section we click on here, there's a little how to use this letter. And when I'm done kind of running through it, I want to go over a couple things there to make sure that we had everything covered. Opening bell, just a quick little stupid comment for me, doesn't mean a whole lot. I'm going back to start on a week ago, so this is the 11th, Thursday, a week ago, the 11th. Yesterday's narrow day will act as a line in the sand and likely determine the market direction for the next several days. Intraday outlook back to neutral. So that's just a quick little, it could talk about upcoming events like when earnings season starts, or it could be just anything I feel like saying first thing in the morning, or a quick little summary of what may happen that day. As we scroll down, these are the next line. These are three really important indicators. These are change every day. A couple times I kind of forgot to change these, even though the verbiage down below made it clear what I said. I forgot to change these. And the first thing I want to point out is the difference here between the outlook and the tradability down below. It's something you don't normally see rated, but I think is very important. The intraday outlook, of course, is a day trading outlook. That can change from day to day, right? That's just whatever it is. Naturally, in a bullish market like we're in, you're going to have more bullish days, but it can flip back and forth. The midterm outlook is kind of your swing trading outlook. The next several days, maybe a week or more. And even in a bullish market, you can have pockets where you're going to fall for several days, and you don't want to be, going long or, getting too early on swing trades. So there's a rating for the midterm outlook, and that naturally is more bullish than not, but can go to bearish at certain times. And then the long-term outlook, this is your, let me pull this away. This is your weekly, monthly chart. This is the big shebang. See down here? This is your long-term outlook. The long-term outlook for me has been pinned to maximum bullish for just about 10 years. You heard that right, 10 years right now. And there's not a single person in this room or anywhere on the planet that can say I've ever changed that even one iota. So just make it clear when we're talking long term, you may pull back for 2, 3 weeks or something like that, but we're talking that big picture, that monthly chart, that weekly chart of that ever breaking down on you. That has not changed, and it still has not changed, regardless of a lot of other conversations you hear about the market ready to crash 5 years ago. I don't want to go into just a discussion about the market. That's not what today is about. I am going to do a little market video probably this weekend, and just to make sure the record's straight about where we are on the market. So those are the three that change, but this one here is almost never changes. When this one changes, I mean, it's going to be a big deal because this has been there since literally for a decade. I haven't always done the letter in this way in a decade, but every comment I've ever made has been the max bullish on the long-term picture. Now, tradability means how good a time it is to develop entries. In other words, even though this has been pinned to max bullish, this tradability goes back and forth. In other words, right now, it's getting to be it's been a low tradability concept. Now, what that means is that, yeah, we're in an uptrend and yeah, we're going higher, but do you jump in right now with core trades? Do you jump in right now and say, well, I'm going to put my stop, way down here under the last 4? I mean, it's very difficult. In other words, the entries are not there. So even though it's bullish and you should be riding out positions, it's not prime time to be jumping into a new position. So when tradability gets really high, you see these areas in here where I'm pointing? Can you guys see the little pointer in here? I'm not seeing it. Oh yeah, there is on the weekly chart. You see that down there? Okay. See, when you come down in these areas, that's when that's when the long-term picture is very bullish. The tradability is very high. These little dips in here, that's when you can enter positions. But when we're way up here in the stratosphere, yes, we're still bullish. We can't say we're not bullish, but it's not prime time to enter positions. Does that make sense to everyone? Just the purpose of that? Because it's not just for this letter. I mean, a lot of you here just get some information and you don't care about the wording of the letter. But it's a concept you should always understand, is that just because we're bullish doesn't mean you get to jump in long positions whenever you want to. That's a sloppy way to trade and will lose you money in the long term. So it has to be timed right. So it means the timing is very poor. So that's what it means. And each intraday, midterm, and long term has both a rating for the bullishness or bearishness, see the bear and the bull, and then the tradability rating from 1 to 10, 10 being most, okay? And again, some of this is explained if you forget if you click here how to use this letter, all right? So let me go down, and then there's a little paragraph here about what happened yesterday. And nobody's ever asked me, but I got to think some people are thinking, well, what a stupid thing that is. Why do you bother to take up precious space with 5 or 6 lines about what happened yesterday? I know what happened yesterday. I can see that. Well, it's an educational piece for you, and I've never explained it, but I think a lot of people kind of understand that. I have several people that use this letter, and they're really, really trying to learn from it a lot, and they really appreciate what it says here. The comments here are written specifically, not just like from a layman's point of view of, gee, what happened? The market went up, who cares? It's written from a very specific technical point of view with really key hints given as to the key things about yesterday. So if you read one, it says gap down, went sideways 50 minutes, then made a new low. The low set the low of the day at the 10 o'clock reversal time. That comment is in there every other day about a major low being set at one of the morning reversal times. Those of you that don't understand reversal times, on an intraday basis, I think are at a rather large disadvantage. It's an amazing concept how often that happens. And rallied back to the high, but basically stayed sideways in a narrow range, closed at the high of the narrow range. The SPY was the same. So it's a quick little summary written in a way that should help you continue to understand technical analysis more. Now, I usually have the Qs chart up here. I look at the Qs and the SPY in conjunction together. 90% of the time, the charts are identical. And when I say identical, I don't mean you could overlay them with on your PowerPoint and not see a difference in a tick. I mean, they're just generally the same, meaning there's no technical relevance difference between them. And if they're the same, it really doesn't matter which one you look at. When they're different, you have to understand two things. When the QQQ and the SPY go in different directions, and I'm sorry, let me just back up a minute. If you're newer, you may be wondering what these even are. The QQQ is an ETF. It's a little shortcut symbol that represents the NASDAQ 100. The NASDAQ 100 represents about 95% of the whole NASDAQ market. The SPY is a little shortcut symbol. It's called an ETF for the S&P 500. So you're basically looking at the market between these two symbols, the SPY and the QQQ. So when there's a difference, two things. Number one, things are going to be choppy. Almost always things are more difficult when there's divergence. And number two, you have to kind of examine why that divergence exists. We just had one of the bigger divergences ever a couple, 3 weeks ago that I've seen. And that one ended up being simply due to just a very clean sector rotation that happened. A lot of money came out of the semiconductors. Those of you that actively are involved with the market, when this was, the semiconductors dropped. And that money, well, here I can show you. And even though right in here, see, this is the SMH, these are the semiconductors. See this drop in here? This is the daily chart. The top right's the daily chart. Below is the weekly chart. To the left is a 60-minute and a 15-minute. That drop in here on the semiconductor, you can see what a nice little trend they were in, and bam, they really got whacked. That was big money coming out of the semiconductors. And you notice they've recovered since then. And when that happened, the money at that time went into retail. That's it, like just at the end of November, beginning of December. Retail surged through here. That's the retail index, and so did biotechs, and so did or the two other things. What were they? The healthcare index soared, and the consumers, like cable stations, that kind of stuff. I forgot to call them the consumer things. All those things flew. So it was just kind of a sector rotation that happened. That also is an indication, by the way, that the market is still healthy. When you see money come out of one sector, even if it gets hit hard, when that money pours into the other sectors, that's exactly what you want to see. In other words, money is not leaving the market in total. It's just shifting around. So anyways, the point of that was we're talking about the difference between the SPY and the Q, and when you have like a weird shift like that where the thing that hit was semiconductors, which is really largely in the QQQ, and going into banks. Banks also went up too. That was the other thing I was trying to think of, the XLF, which is, see right in here, see this surge? It was out of semiconductors into banks, financials in general. You see that right there? So when you see that happen, it's just a very bullish thing for the market in general. One of the indications that tell me, we're not there yet, and we're just not at a top yet. By the way, as I talk about the market, for those of you who don't know me, I want you to understand I am by nature a bearish person. You would never know that listening to me for the last 10 years, but I am by nature a bearish person. I'm not one of these perma bulls that just thinks things are going up. I can't wait for the market to crash, but there's absolutely no indication that it is, nor has there been at any time in the recent years. Now we're on the verge of getting close, but I don't want to get into that right now. So from there, back to the letter, then we go into the little review for the day. It talks about what the concept is on the day technically, and on most all days gives a play concept as good as it can. Now keep in mind, when you're looking to call a play in the market before the market opens, because this letter goes out at 8 o'clock, I don't think somebody can appreciate how tough that is. I mean, it involves, and naturally my personal view may change during the day as bars form, but to go before the market opens and say, hey, if this happens, if that happens, here's what you do. You're long here, you're short here, and do that with accuracy. One of the things you have to always remember is that any kind of a play that you talk about is always conditional. It's never, ever the concept that you just say, oh, next Tuesday the market will be up. Tomorrow the market will just be up. I mean, you just can't say that. To give a play that you could actually make money on, to actually be able to say, hey, I'm going to enter and exit, you need to have an additional statement. It has to be something like what I say in here, like would be to be long over the high of the day, after the first pullback, after 15 minutes. It's a pretty simple call. Now, sometimes the calls in here use some terminology that has meaning. There are things that people who've taken seminars from me would understand better. I'm not saying you have to get the gist of it, but you may not get the exact meaning of some of the stuff that's talked about. I talk a lot about a confirmed move over a high, a confirmed move here or there. For those of you who've taken seminars, they're basically translate to secondary signs of strength and weakness, which is a concept that you can learn. But even if you don't learn that, it's just kind of a common sense thing. What we're trying to say basically is if the the market, if I make some call, it never would be this, but if it was just to be long over the high of the day, if here's your high of the day, and we open down here, and you run for 60 minutes right to the high of the day, and then you take it out by a penny, that doesn't mean you're supposed to go long. A confirmed move means, after it's tested, you see some selling, and then you make a new high after that at some point. So that language is used. And it's really hard to avoid that language. I mean, we are traders, and I can't put it out. I cannot put it out in an effective letter without using some language that gives meaningful content. It's like if you're a doctor reading an article on how to do a heart transplant, you can't ask the author to not use medical terms. I mean, it's part of what you're doing. So I don't try and load it up with technical concepts, but sometimes they have to be in there, just so you know. But for the most part, it's understandable. And then I rate the prior day's accuracy, and it says right there, yeah, it may be subjective. It may be subjective because I wrote it and I know what I'm saying. It's not subjective in that I don't try to sugarcoat what I do when I call something wrong. I say, I gave myself a -1 one day. That tells you it was just wrong. But the majority of days, this thing is really right on. There's some days where it's not applicable because none of the conditions I gave ever happened. So it just turned out to be a nothing day. I typically will give a general market sense, like we should be heading higher if we do this, and then there'll typically be some kind of call. And sometimes the call won't actually trigger, but the market comments were right, or it could be everything was wrong, could be everything was right. So there's a comment in there, like in this one here, there was no play yesterday based on the comments. As the market went sideways, the overall comment of it remaining a bearish day due to the price pattern on Tuesday was accurate. So it just kind of gets a so-so rating. And then down here, there's just econ for the day coming out that day and big earnings for the day. And just trying to make it kind of a one-stop shop for people to get the letter. But, here, nobody cares about that if you're listening to me. And then there's intraday watches for the next day or two. These are what the trading room starts with, the list over here. These are watches for intraday play, or maybe they'll move a day or two. And then on the right are longer term watches, things that would be moving on daily, weekly charts. Now, these are watch lists. These are not plays. There's a huge difference. And if you've been to the little biweekly Monday night scan sessions I do, you hopefully have understood that I mean, the bullish list sometimes means this stock is going to fall unless it gets over this area, then it's a great long. So you can't just look and blindly say something is bullish or bearish. You have to appreciate what the list is there for, the bullishness or bearishness in the particular symbol, and understand that there's an entry requirement that has to be met. Otherwise, you would never play that. And then you can click on this, and it takes you to a link for the little article of the day. Okay. All right, so that's a run through of the letter real quick. Now let's go back and just talk about a couple of details. On the chart here, some of you may not have noticed this, but the letters 1, 2, 3, and 4 are always on here. 1 and 2 are resistance and support on the daily chart. 3 and 4 are resistance and support on the hourly chart. Now, there's not always resistance areas. In an uptrend, there's nothing at this particular day, there was nothing considered to be resistance at the high. And often on the intraday pattern, it's the same, especially in the strong trends we've been in. Sometimes a pattern forms that would give it the connotation of having some real resistance. I use 3 different types of lines. You see, this is a solid green line. That means it is real support, and it's a pretty finessed area. Okay. A solid red line means it's real resistance, and it's a pretty firm area. If you look at some other days, let's just scan up real quick. Sometimes it's a wider line, meaning it's a general support area. You can never predict support to the penny. But sometimes that area becomes wider and wider. Like here, it gets really wide in here. There's 2 different areas kind of, or anywhere in between that could support the daily chart. And yes, it's all big one support area. There is no specific area. If you break that little pivot there, it does not make the market bearish. It's just a wide area. It doesn't mean much at that point. And then there's dotted lines. Now, when dotted lines are there, do we have a dotted line here? There's one recently here. When we have a dotted line, like here, it means that that has become an area, but the concept is really not that that area would hold and to short. It means that we want to get over that area to be long. In other words, it's a focal area of resistance, not a real resistance area. Does that make sense to everybody? The 3 different lines here. And again, I'm going to get into some specific chart comments in a minute, but for those of you, this is first for the people that take the letter. So if you get the letter, do you understand what these 3 different lines represent? And even if not, it's a way of thinking. I mean, be careful that like in uptrends, little resistance areas like this are not things you short for the most part. They're usually things that you want to play long once you get above those areas. So that's what the dotted lines represent. They represent you really want to play on the other side of the dotted line when it breaks. It makes sense, everybody? It's a very informal talk, by the way, as you can tell. I'm not like here with documents and PowerPoints. I'm just here winging it, so feel free to ask anything if you want. So when you click on that how to use this letter thing, it pulls up this. Let's see if there's anything in here I wanted to go over. The letter is technical in nature. I am from 0 to 100% for somebody who knows me. How technical am I in terms of my reading of the market? After years and years, and initially, going through everything, just like the Darvis did in his book, How I Made $2 Million in the Market. After initially trying everything to conquer the market, I eventually came around to the conclusion, you're all wrong. 110% technical. 110%. I'm at the point where I will just simply say there is no other way to look at it. And if you don't agree with me, I just think you're wrong. But there's no such thing as, hey trader, 88, you kind of put a space in your eights there. You don't normally have that. I know there's no such thing, but it makes a point. It's a philosophical point, meaning I'm at least 100% technical. So let's see, I talk about time frames, what the market is, watch lists, all times. I think we covered everything. Dotted lines, solid lines, conditional calls. All right. One of my biggest things is, I sometimes read other stuff just to see what's going on out there, and sometimes I'll read or I'll read some kind of letter or something for 10 minutes, and when it's all done, I don't have a clue what the call is. I don't have a clue what it said. It's just like, well, the market has been in an uptrend and it's getting a little extended, so we could see a pullback today that would result in some selling unless the bulls take control. Then we'll see buying today. You're done reading. You're like, well, what the heck was that? Yeah, I know all that already. So I try to never do that. It's very specific what the language is, and it's something when you're done on 90% of the days you can say, hey, that was a good comment, or that was really stupid. That's okay. I still know who you are. I'll just call you 8.8. All right. So with that, let's. I don't think there's going to be any questions about the letter format per se. So let's take a look at what most of you are probably here for, is to say, well, what happened this last week? Again, I want to go through the last week because that's what's most relevant. I don't want to go back to some illustrious day 30 days ago when the letter nailed it perfectly. I just want to see whatever happened the last 5 days, which is what I'll always do in these. So let's go back to last Thursday, which was the 11th. And I'm going to dial the charts back to the 11th. And get ready to talk. I'm going to ask you guys for some commentary here. Okay, so so on these charts here, let's kind of get rid of the weekly chart to scroll it off there. And on these charts here now, I'm going to scroll it so that we're going to pretend like, it's the morning of the 11th before the market opens, okay? Whoops, and here you're cheating as well. You can look at your own charts if you wanted to cheat, I guess. All right, so there we are, okay? Let me pull this down a little bit. All right. So here we are. The market's closed after the 10th. It's after close on the 10th or the morning of the 11th. Here's what the charts look like. A 15-minute, a gap down, refused to fill the gap, a consolidation. Hourly chart shows the same thing. This is the 60 up here and the 15 down here. Daily chart then looks like this, a gap down day after a red day, unfilled gap, boom, boom, boom. And the question is, all right, what's the commentary for tomorrow? Let's get into what you guys want to hear. Let's talk technical. What do we look at? What do we think's going on? What will the comment be for tomorrow? Anybody throw some words out there for me? I want to let you guys hit a few comments and think, because this is what we're going to do the rest of the time now, is just kind of take a little look at what happens. Any comments at all about the price action? And again, just pretend we're in that moment in time. So I'm going to say what happened yesterday. That would be yesterday, the 10th. What should we look to happen today? Is it a high odds day and let's say we're playing the market. Now again, there's two concepts to knowing what the market's doing. You could play the market, right? You can take your trade on the market. You can also use the market for your overall bias, which is very helpful. If you're trying to trade intraday and you're going long on a bearish market day, you're going to have your head handed to you in most cases, right? Not all the time. There's exceptions. But we want to know where the market's going on a general day-to-day basis. Correct, everybody? Let me start with that. Do you agree with that comment? It's helpful to know where the market's going if you trade? All right. All right. So, come on. You guys are about to trade. Pull your belly up to the bar here, and what do we do? What's the comment? Are we bullish? Going to be bullish at the open? Does something have to happen for us to be bullish? Something have to happen to us to be bearish? What's the story here? Come on, I'm subscribing to your letter, and I'm not even going to pay 10 cents for it if I don't get more comments than this. Just throw anything out there. If this happened, I'd be bearish. If that happened, I'd be bullish. I wouldn't trade the next day. And by the way, it's a good comment some days. I put that in the letter some days. Just hey, I've done that a half dozen times. Can't even make a call today. Got to wait till intraday action forms to even see what the possibilities are. Close of the high of the day, bottoming tail bullish. Okay. All right, so there's anybody argue with that? Anthony said we closed at the high of the day, left a bottoming tail on the daily chart. Well, Anthony, let me just play, what do you call it? Devil's advocate. Let me just play devil's advocate, okay? Whatever you say, I'm gonna just slam it, okay? I don't care what you said. Well, Anthony, number one, we don't really call that a bottoming tail. Bottoming tail has to be an average sized bar. That's a little tiny microscopic bar, could care less. And you're calling it bullish because you closed at the high of the day, but this gap down couldn't even fill the gap. It's so weak that it couldn't even fill that little gap down. That's the ultimate sign of weakness. So what are you talking about? Again, don't get mad at me. I'm just playing devil's advocate. Whatever you say, I'm going to argue with you. I just want to bring out the points. Overall, it's still bullish, but expecting continued sideways or more pullback. So Carmen says, okay, so all right. So you sound like one of those money people on CNBC or something. Blah, 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 blah. What does that mean? So what do I do tomorrow? Kind of like Will Rogers, I'm bullish. If the market goes up, be bullish. If it goes down, be bearish. I'm not sure what to make of that. Needs to gap above previous day. Okay, we're getting something to be bullish. Okay. So let me hold on to your comment a minute. There needs a gap above the previous day to be bullish. And so if we gapped up, trader, would you say, let me ask you the question, if we gapped up to, this is 162, that's 163, if we gapped up to 162.50, would you be bullish? Would you buy the opening tick? Would you buy 5-minute high? What pattern in your head needs to form for you to be bullish? You'd wait? What would you wait for? Prices flying high in the air away from the area. Confirmation of trend. What would a confirmation of trend be for you? Yeah, Alvin, sideways consolidation early, then C if it can break out of the revenge hell for Gabbard. Okay. But the first 5-minute high. Okay. Well, let me give you my comments here. Number one that nobody said is if prices were to gap down below 161.50, I'd be bearish first of all. Okay, if they gap down below 161.50, I would have a bearish bias. Now, I need some confirmation. Ideally, I'd like to see a gap down below 161.50, have prices try to rally and then take out the low of the day. Boom, I'd be in short. That'd be a good setup. The problem with that setup, of course, is that it is going against the dominant trend on the chart. The daily chart, weekly chart are skyrocketing higher. And anytime you're playing a day against that powerful trend, it's always a compromised day. Ideally, we would like to see bearishness overcome so that we negate the bearishness and play with the primary direction. Does that make sense, everybody? That's a primo day, when we can negate bearishness and play back in the primary direction, whatever that is. So the best trade would be is if we could get over this garbage, right? Now, a gap up, unfortunately, is going to be interpreted bearishly initially. Why is that? Well, because we ran from the low of the day to the high of the day into the close. And if we were to gap up somewhat, there'd be some profit taking. So I would not want to do like a 5-minute high type of thing. I need more time than that because of this run up that occurred into the close. You'll find that many times if you gap up after that run up, you'll goof around for 5 minutes, you may take out a 5-minute high, and then you come crashing in to fill this area. This is likely set up for a gap fill. Okay? So I'd want to see the pull in come, a confirmed buy setup off the bottom, or if we don't completely fill, I'd want to see at least like 15 minutes go by of red on the chart before we make a new high to go long. And then, if that's the case, go long. Okay? That'd be my call. So let's see what happened, because I have no idea what happened the next day. I can't remember that far back. I'm not even sure what my last name is. Boom, oh, look at that. So there's the hourly chart. Wow, screamed higher. Anybody that was long got rewarded. Let's see if it was on the 15-minute chart, the way it occurred. Oh, look at that. Look what happened. Oh, gee, even the first 15-minute high, right, didn't really, well, it worked. We held. But see what happened from the day before, what I was talking about? The fact that this run-up caused this and this. In other words, you have to still look at the overall pattern from day to day, and this setup becomes your 3 location areas for that overall 15-minute chart. And that's why on a run up, even though it looks bullish initially, you got to wait for that pullback in this general area in here. Once you get that pullback in here, then you're off to the races. All right? So there is that day. Boy, did I do good on that day. Made a ton of money there. All right, let's go to the next day. So now we're up here. And let's say we're looking at, in the morning, we're getting ready for the market, right? And we look at these charts, and here's our 15-minute at the close of the 11th. Here's the hourly at the close of the 11th. Here is now the daily chart at the close of the 11th, right? We actually took out that prior high. And let's say that as we're kind of getting our notes together, we look over at the future and say, holy cow, we're going to gap up this next day. Matter of fact, we're gonna gap up to right around 165.60 or 160. I'm sorry, where are we? 11, 12, 12, 12, 12. Oh, I'm sorry. No, just comments. I'm sorry. Just comments. Do I have the hourly chart set right? The end of the 11th? Are we right? 11th? Yeah, that was the day up, day up, day up. Okay, all right. So I'm sorry, let's just back up. Just take it from here. Comments for this day. We don't know of any gap this day. Just have a flat open. So we have a flat open this day. Flat open this day. What's our expectation for the next day? Would you be thinking primer? Would you want to be bullish? Want to be bearish? Was there something you'd want to see on the chart to be excited about being bullish or bearish? What are we going to be here? And some reason other than, hey, we've been in an uptrend, so we're going to keep going uptrend. We already know that. We know we're in a strong trend. We know that we always default to being bullish in a market like this because we're just in a strong market. But let's get some other comments beyond that. Looks like a PTR on the 15. Okay, so Anthony's saying that this 15-minute chart, well, that's not really a PTR. Oh, a PTR. Okay, yeah, okay. So Anthony's saying that even though we ran up hard, we kind of consolidated right into that prior high. So that kind of gives us a little launching pad. That's a good comment. Okay. What about when you look at it in conjunction with the hourly chart? Are you happy about that? Okay. So good comments. We the key thing to me here is the reason that I would expect and expected a pop that day is something nobody's mentioned. Um, it's one thing to say, okay, we've been moving up, so we keep moving up, but it really becomes more powerful to say, hey, the bears stepped in and they proved to be impotent, worthless. You see what I'm saying? We gapped down this day. The bears couldn't really move us much lower. And it was a one-day wonder, and the bulls just came back, and by the next day at close, we had reversed that entire gap. Does that make sense, everyone? It's a very powerful concept in the market. Matter of fact, it's what makes real accurate chart reading possible. Measuring the strength of your opposition, if you want to look at it that way. Okay? We can always say we're going up, but the question is when we're going up, we know someday we're going to pull back. Just because we're going to pull back, or the bears, but what we're told here is the bears already came in, profit taking door was opened, and everyone said, no, I don't want to take profits. I'm not afraid. So to negate that in one day, to have that gap down and then negate it the next day and take out the prior high, why are we not going to go higher is almost the question. You know, it kind of becomes almost a common sense argument. Technically, we're in daily uptrends, hourly uptrends. The only issue on the chart is extension, and it's not really an issue. You know, to say a pattern is extended, I always say, is a visual term. It's not a technical term. To say a pattern is extended gives no meaning as to whether or not you can play it or not. Things that are extended keep getting extended. You may want to draw certain, have certain rules set up if you define extension, but something that's extended is not going to reverse. It depends how it gets extended. So that's the only issue, and it's all power here. So yeah, I would say for the next day, up, because we did have a decent rally into the close. Why does that hourly chart look wrong to me? Oh, because I caught part of the next day, I guess. Oh, the 15. Oh, the 15 is missing a bar or two. There it is. Okay, that's why. There we go. The 15 had a little pop at the end. I didn't include it when I showed it to you. I was trying to reconcile the hourly and the 15, so there we go. And also we have this nice little base as a launching pad, like somebody said. So next day, yeah, I'd be bullish, and you almost probably got to kind of take it out of the gates, type of thing, as long as we hold. So the next day we open basically flat. I mean, it negated that little pop at the end of the day, but then just launched straight higher. And we only have 2 more days of this to do, so if you're getting bored, don't worry about it. And then we're going to do something else when we're done with this. Okay, so we're now at the close of the 12th. We had a really strong run up in the morning, consolidation in lunch, little pop during lunch, closed pretty strong. Hourly chart, a small, even though it gapped down, the hourly chart uptrend 1 day, 2 day, 3 days. Okay? So now we're getting prepared for the next day, and we see something different this day, and that is that the market is going to gap up. Right? You can tell that when you look at the futures, you look at the Qs pre-market trading, the SPY pre-market trading. And we are going to gap to like 165.5. So we are going to gap right up, just right in here, right under that blue, right about in here. We're going to gap to there. Okay. Comments for this morning now. What about comments for this morning? We have that pattern behind us, and we have a gap up of about 60, 70 cents. Close at 160, almost a buck. It was a buck. It was a gap up of a buck on the Qs. Let's get some comments going here. What are we going to do? Bullish, bearish? When are we bullish? When are we bearish? And aggressiveness level. What are we? What do we need to trigger it? And what's our overall tradability rating? How aggressive are we? How much do we like it? What has to happen for us to take a trade? What has to happen? Okay, be the tail on the pullback. So you're saying, market, Carmen, we gap up, and then when the market falls, we try and grab it when it's falling because it's going to go higher that day? Wait for a pullback and buy setup. And by the way, especially after this day, if you don't know me and you don't like the way I answer this day, don't go anywhere for a few days because I'll humble myself in a minute. But pullback. Okay, any other comments here? So everybody's saying basically, I guess you're basically saying we're in a bullish market, right? So we're gapping up, let the pullback come, and then go along. It's like, guys, a 1 minute pullback at 9:35, a 5-minute chart at 10 o'clock, 15-minute chart at 11:30. What time frame? How much of a pullback? If we gap down and pull in for 10 minutes and then start to go higher, do we want to be with the market to get that? Casey wants to get what? What's that word? Get short. Get short. What does that mean, Casey? Oh yeah, that would mean you want to short the market. Okay. So 30-minute pullback, then we go long. Pullback to support. Alvin, where's support on this chart, by the way? I mean, you said pullback to support, so what would that level be? If we're gonna gap up to here, I mean, the first bar is here. Is that your support level right there? You're looking at, Alvin? So Casey answers, Casey, when do you short? You want to just, what are you going to do? Short the open? Short once we break yesterday's top? Prior high of the consolidation? Is there a consolidation there? Oh, this up in here? Okay. Market the high of the 30-minute buy. If it trades, okay, so gapping up to here, you want to wait for it to pull back and then take the 30-minute high. So basically the answers are, one person said short, one person said, different people said various pullbacks and go long at some point, and that one person said that. Okay. Well, let me see. Having no idea what's going to happen, let me give you my analysis. I see a daily chart where every time these moving averages peel apart and the price gets X above, that we roll over and we come in. Do you see this, everybody? This is not an accident. This has happened every rally with one exception for 10 years. Do you see this? Now, I'm not big on trend lines, but I do want you to notice this. Do you see this? I'm not big on trend lines. I'm not saying, hey, you short when you hit something like that. So we're right in here. Do you see what I'm saying, everybody? Yeah, it's a little channel. When's the last time we hit the top of the channel and then blew above that on this chart? When's the last time that happened, everybody? Like never. How about never? I'd have to go back too far to look. So I'd say, despite the fact that a lot of you wanted to be bullish, I'd have to look at you guys and say, well, why? We're at the top of a channel. Number two, same thing on the hourly chart. We are 3 days up on the hourly chart and gapping up. Gapping up a lot. Gapping up a lot. I would be all out bearish at whatever small sign of bearishness I can find. Any failure of the bulls to move things higher. Get bearish early, get bearish quick. And by the way, this is not support. Gap fill is not support. It can be if it forms right. That's not support. I wouldn't even be afraid of, hitting that. Now, of course, if you hit that, that'll be a huge home run trade. So I think we're going to gap up and we're going to come crashing in. Now, of course, I don't have a clue what actually happened. So let's take a look and see. Let's see. We gapped up. Oh, look at that. We tried to pop higher, and then we start to fall. Somebody said buy the pullback. That's the hourly chart. Let's go to the 15. Oh boy, I can't even see it. Look at that gap in there. Whoa. Well, we moved higher, and then there's the pullback. There we go. Green bar. Everybody long. Who are all the pullback players? Right there. 15-minute chart, big green bar, long. Right. Oh no, that didn't work so well. There we go. Long there. Oh no, it didn't work so well. Oh, there we go. Gap fill support. Now we got it right. Oh, wait a minute. What the heck happened? That book I read about gap fill support isn't accurate. Oh, finally we hit bottom at 3 o'clock in the afternoon. What the heck happened? Huh. Hey, I got that day right. Gosh, I'm pretty good at this. Next day. What do we do the next day now? Despite the collapse because of the gap, this is what was called an intraday novice gap, is all this was. But notice even after this gap, while it did really kind of wreak havoc in some ways, notice that the hourly chart never broke trend. In other words, here's the other thing about, guys. I talk a lot about, with my technical analysis, the concept is just learning the language of charts. Getting away from these cliche sayings that don't really work 70% of the time, and understanding what's really going on. Who got in pain on this collapse day? Who was in pain on this collapse day from prior days? Who was in pain? Who was saying, holy cow, I'm long and I'm getting killed now? Nobody. Yeah, nobody. The encroachment in the prior days is virtually nothing. I mean, the only people that would be saying ouch a little bit were people that went long at the end of this day, and by the end of this day, they were kind of break even, right? But there's no pain, there's no fear out there because it was a gap up and fall. Now, typically, gap up and falls are met with some selling. This thing really puked out that day. So the next day, you almost kind of hit the reset button and just look for a new setup as to what's going to happen. You know, we came up, we collapsed, we fell again. So what's going to happen now? Well, let's go to the 15-minute chart, and you really just kind of need to reset and see what's happening. So we gap up the next day out of that pattern, we pull in, and this is one of these days where you really got to just take the morning and see what the bulls and bears do. So look at the battle that goes on here, right? A gap up is sold, first rally attempt gets squashed, right? And then the bulls come back again, and then boom, all of a sudden the battle is won by the bulls. And even though it's a sloppy pattern and probably hard to try and enter at that point, you know, the decision goes to the bulls, and there's a little pullback there. You could get long. Once the decision is in place, the next question is find an entry, and there we go. Boom, so tough to say what to do before open that day, and that's what I say. Some days it's not easy, but living in the moment, not bad. Although a sloppy day to say the least. So I think that day would be hard to really do anything with, to be honest with you. If you're there in the moment, right in here, you could be long, but ahead of the market to say what to do, I think that's a tough call that day. You got to let the bulls and bears decide who's boss after that day. Okay. And what do we do the next day now? So here we are. We run back. We retest this high. So now we're looking at the end of the 17th. End of the 17th. End of the 17th. Where do we go now? What's the 17th? That was Wednesday. Oh, so we're just into yesterday now. Okay. Right, 17th. Today is the 19th, right? Yeah. So 17th is Wednesday at close. So now we're going into yesterday. Clear call into yesterday? Any comments from anybody for what would be going on here on the 17th? Well, for the 18th, after the 17th? Very tough pattern, to be honest with you. Very tough pattern in there. My initial inclination would be to be bearish until proven wrong, because as I said, these big red bars that come selling usually bring in some more selling eventually. I mean, once you come up to retest this area because it's such a wide pattern. But being in the bullish market we're in, I wouldn't want to overstay my welcome. So I would look at this as an hourly sell setup if we continue lower below that area, and take it for whatever you can, and then expect to have some kind of battle and a tough road after that. So the next morning we did pull in some, probably less than I would have expected to, which tells me the bulls are not far away. And then we get right back to consolidating at the prior highs. Now, once we're consolidating the prior highs, again, if you're with the market during the day, to be able to hold that small of a pullback, come right back and sit at these prior highs, the chances are very good you start to get bullish again as you're going to go higher. Okay. So let me ask you something. The little rundown I just did, was that impressive? Be honest now. No, you're all liars. It's not impressive at all. I have the charts in front of me. Anybody can do that with the charts in front. I can make up any kind of garbage I wanted to, couldn't I? Well, I think there is reciprocal inverse invalve indicators showing that the prices are going to fall today, because I know they're going to fall because I'm looking right at the chart in front of me, right? Anybody can do that. Any one of you could have got up here and done that. You could have just said, hey, could be your second day trading. I could say, hey, yeah, Paul, let's see, it's a red day tomorrow, so I think we're going to sell. Now, what would really be impressive is if somebody could actually say that with that accuracy before the market actually opened. Now that would be impressive. Then you could give me a compliment. So let's see how we did. On the 11th, let's go back to where we were. Back to the 11th. Whoops. Let's scroll back the hands of time again. Remember the 11th, that was after we had that gap down day, and it was going to be a kind of a tough call coming out of the gates. But negating the gap down day would be bullish if that's what it turned out to be. Well, let's see what the letter actually said before the market opened. Well, Carmen, if you get to have the charts in front of you, if you see the future in front of you, you could do this immediately because it's very easy. It's a little more difficult when you're actually predicting the future the next day. So let's see what happens. So the morning of the 11th, before the market opened, basic outlook, it will be best, here's the bottom line, it'll be best to watch price action. So this goes on to say it's going to be a difficult day to analyze, but the best plan for now would be to be long over the high of the day, after the first pullback, after 15 minutes. Now notice all this stuff is important. The amount of time you have to wait, whether it's on a pullback or over the high, do you have to prove bullishness, or are you bullish enough? See, once you've proved bullishness, you can buy pullbacks. If you haven't proved bullishness, you have to take strength. Does that make sense in general, everybody? Just a general concept. Just think about it. Just categorize things in your brain, right, without necessarily having to go through hours of classes. Just generally, that once the bulls have proven they're victorious. Once bullishness is proven, you can then buy pullbacks because we've already proven the bulls are winning the war. So if the bears win a couple battles, we can buy because we know we're winning the war. But if the bears take charge, we need the bulls to reassert themselves. And that's the difference sometimes between waiting for a new high or waiting for some area to be traded above before you go long, rather than just saying, okay, on this pullback to support, we'll go long. Pullback to support, you can't buy if you don't have confidence that your team is in the driver's seat. Does that make sense? If I trust my team around me, I say, hey, these guys are strong. I'm not worried about it. Just, take me in your arms and we'll rock right through that prior area. That's what you have to do. But sometimes you're not sure. Sometimes you're looking around saying, hey, these bears have been kind of nasty. I want to wait until we get over that bearish area, and that's the difference. So on this day, because of the uncertainty, it said to wait for the 15-minute high. So, so the next day, so basically it said to wait to the end of this. Well, let's look at a 5-minute chart for fun. Let's get a little more detail. It's the 10th and a 5-minute chart, and again, need some more days here. Give me 1 second. I gotta scroll back far enough. 10th. All right, so here's a 5-minute chart, and there we are at open. So what we're loosely saying is we want to see this thing to take out that high. Now here it pulled back. Again, I would have no problem with that pullback. And actually in this case, once we took out the high, the pullback is okay also. And then we flew higher. So really a good accurate assessment. And again, even if you went long here, I don't think it should be a problem. You definitely should not be out of any trade up in there. And once we took out the high, if you waited for the next pullback, either way, I think that would be a great entry. So for that particular day, I think we'd call that pretty well nailed. Whoops, that's not the letter. Here's the letter. So we roll on to the next day, and it says perfect call, best plan, blah, 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 and it worked. So now for the next day, what does it say here? Oh, let me scroll the chart forward real quick. So now we've already had that day, and now we're at the end of this day. 15-minute chart. On the, where are we, the 10th, 11th, 12th? All right, so we just closed there. Daily chart right in there. All right. And this is when we said, well, you remember we talked about here coming back after one day, reattacking that eye, consolidating in the afternoon, generally bullish. Of course, that's with the hindsight of seeing the chart in front of me. For today, there are no resistance areas. With the likely power trending pattern that we have, the support areas in the chart are also likely useless. While it is not effective yet, and while it can't really be seen on the hourly chart, the 160 area will serve as support if we get gapping above that area this morning. I expect we'll see a moderate gap up this morning, some indecision the first 30 minutes, and prices eventually moving higher by late morning. The buy setup that forms on the 5-minute chart above 163 is the play for the day to be long. Holy cow, that's really a lot of detail. Anybody get that? Let me see, 163, buy setup forms, gap up 163. Let me scroll that over here, pull that down. And I guess we got to come down to a 5-minute chart. Is that right? So that's on the 12th. Let's go to the 5-minute chart on the 12th. There's the 12th. Look at that. Went above 163, 5-minute buy setup, boom. Now, in case you're not following, that of course was written before the market opened. 163 will serve support once we're above that area, 5-minute pullback, boom. And you get all of that. Again, if you're just following what it says in the letter playing the market. And again, I'm not going back to mid-August to pick out 3 dates where this worked well. This is the last 5 days, like I said. That's about as good as it gets. The next day, hopefully it said perfect call, blah, blah, blah. It explains what was said. All right, let's look at this day. So this day now remember where we are now. Now we're at the end of this big move up day. And this is the day we had a little controversy, right? Somebody there said go short. And we had a lot of buy the pullback type calls, right? And of course, this is what ended up happening. That's the end of the day. So going into the day, I said we knew we were going to gap up about $1. And I said, because I could see the chart, I said, well, I'd be short the entire day on any sign of weakness and not even worry about the gap fill, right? Well, what did the letter say before the market opened? Today, I believe prices will come in a lot Again, this is before the market opens, right? This isn't at noon. This is before. I believe price will come in a lot if we do open with a gap over 165.40, and we did, or close to that. The question that cannot be answered 100% is when. However, even now, I think today warrants shorting very quickly out of the open, even during the first minute of the failure to go higher. And if that doesn't work, a second try on the first time a 5-minute buy setup fails, or the low of the day is breached. Target for some is a 50% retrace, some for all day. Notice it doesn't say gap fill, it says all day. Everybody notice that? So let's go back to the 5-minute chart and see how that would have played out on the, we know what it did on the hourly. It tried to pop, which is not uncommon. I call that idiots getting long. I'm an idiot sometimes, by the way, don't worry. What day? This is the, what day are we on? The 17th? 16th. Okay. First 5-minute buy setup to fail. Now, again, any sign of weakness the first minute, it didn't really have any. But regardless of whether you found that or not, I think the first play you really have is right here. 5-minute buy setup fails right there. There's your short. You see it, everybody? That's exactly what the letter said to do. And there's the result. 50% target, end of the day target. Okay? So starting with where we did, you would have captured most of this day, all of this day, all of this day. Now notice we're not just going up, all of that day bearishly. And I even forgot the exact wording on this day. Like I said, I didn't really prepare for this very much. But the next day, we'll keep a bearish bias, the threshold not being an easy one. There'll be rally attempts. If the rally attempts fail, I'd want to be short. The level to short, however, is not on the chart. It will form intraday today. Most likely scenario is to rally once, pull back and rally again, and set the high between 10:30 and 11 and 5-minute done. Now that's not really what happened that day. No play was triggered based on what I said, but also the bias was looking bearish and it didn't happen. Now, in the market in the room that day, there came a point in time where I had to switch that bias around. But initially I did start this day with a bearish bias. So on this day, the call was not, it didn't generate a play, but the call started out to be initially look for a bearish bias, and that just never happened. Where are we? Where is this? The 12th, 17th? That's the 17th, so right there. So we gapped up, but there was never any, you see, this is where the conditional thing comes in. There was never the bearish setup. We gapped up, we pulled in, hit some area, and then we turned around and went higher. And the bears never won a single battle that day. So while the initial concept was X, all that happened was Y. All right. So let me stop there and just go. So the point was, while we went through and analyzed the charts, is that you could see, except for the last day, virtually every day, the wording in the letter was such that it nearly perfectly called every day. Now, it doesn't do that every day. It can't possibly. And the point here is, too, I don't want anybody to get the letter. I don't care about that. My point really is to tell you that technical analysis is something you can really learn well. You can get to understand it. And to be able to do that before the market opens and give a very high accuracy of calls, it's much easier once the market's going. You have some bars to help you interpret as well, too. It's more difficult to come up with every scenario. So for those of you who get the letter, I wanted today to give you a little better insight of how to use it, some of the little tips and tricks in it, tips and tricks in the letter, some better concept of exactly how I look at evaluating the market. and what goes into producing it. So I don't know if you have any questions, anything you want to ask or talk about or anything at all. That's basically what I wanted to run through, was just take you through, a typical week, what actually happened, why I think it happened, and then show you that the letter, basically is there. And it's typical. There's some days it gets it wrong, and some days things don't apply, but for the most part, it's right there. And also in there are like I said, the intermediate and long-term calls as well. Actually, James, this is recorded if I didn't screw it up. I frequently screw it up, but I believe it's accurately recorded, and I'll put it on the site tonight or tomorrow. By the way, I have a couple other videos I put out there recently about controlling slippage and about order execution you can listen to, I mean. They're about 6 minutes and 10 minutes long, and they're on, we're on the site, right? If you go to my homepage, there's a thing called the free stuff page. And the free stuff page, there's a bunch of videos. You can, if you've never been there, you could spend probably, I get getting pretty much stuff out there actually. Yeah, no problem, James. That's why I want to record it for you guys who want to listen to it. But let me ask you, I mean, it's 3:40. I ended up talking longer than I thought. But I'm not going anywhere. If you guys have any questions you want to go over, talk about, feel free. Something interesting I just looked at today, and I hope I'm accurate in this. Nobody has ever canceled the letter yet. Nobody's ever canceled the letter. Is that true? Maybe it's somebody who's a combo. Yeah, I think it's somebody the combo that's going out of country or something for 3 months. But I mean, just in terms of letter subscribe, I don't think anybody's ever canceled. So it is. But the purpose, like I said, is really just to show you that the technical concepts are alive and really well if you really understand them, but you have to really understand them. You can't just, get out the Cracker Jack box with a little 1-inch book inside and, base everything on that. For each scenario, hey Sean, for each scenario such as gap up and sell that about the odds of winning, have you determined based on years? For each scenario such as gap up and sell, Okay, Sean, in my mind, you can never track statistics on something like that. How do you group things together, Sean? I mean, you just want to say every time the market gaps up, does it pull in? I mean, there's 50 different scenarios. There's 50 things I would look up in a gap up to determine if it's going to rally or go down. So, I mean, how do you classify all those? I think it's the problem, Sean, is exactly what you're saying, is that's what people want and it doesn't exist. There's no such thing as a statistic about, what happens. It's the overall look. Sean, you know what it's like? I mean, honestly, it just popped in my head. It's like if you're a man and you're going to a bar that night to find a woman, and somebody says to you, if you see a blonde woman, what are the statistics you're going to fall in love with her? What would you say? You say, well, it's not just blonde. It's everything. It's how does she talk? What does she like? Right? The same thing. A gap. So what? It's a gap up. So what? Tell me about everything else. Tell me about support level. Tell me about extension on the daily chart. Tell me about extension on the 60-minute chart. Tell me about how much of a gap. Tell me about the prior environment we've been. Tell me about if there's any signs of bearishness ignored before the gap up. All these things. I mean, all of them come together to make a picture for you, and you can't just say, oh, here's all the gap ups in the world. 42% pulled in. Well, how much did they pull in? Did they run up first and pull in? Did they pull in right? You know what I mean, Sean? It becomes the categories. You'd have 700 categories of statistics. It would become impossible. You know what I mean, Sean? Does that make sense? I'm having a hard time. I think I'm explaining it well, but I think I'm having a hard time explaining as strongly as I'd like to in my head. It's not even conceivably possible. It's not a statistical thing. It's more art than that. Well, you know what, Sean? There are quant people that do stuff like that. I read a book once that has the statistics in it. Like after a 1% rally, a gap up has X percent. But who cares? I mean, I just, what do you do with that information? So you look at the chart, Sean, you say, okay, here's this thing. We had 2 green bars and we're gapping up today. And this thing I'm looking at says there's a 62% chance that we pull in before we go higher. What do you do with that? And that knowledge would be so inferior to what you should have in your head before you trade the market that it's meaningless. You know what I mean? I mean, I'm all in favor of statistics. I think statistics are a part of technical analysis. But you know, they're just they're just too hard to have meaning because there's too many variables. You're looking at variable after variable after variable. Like I just rattled it off. I just rattled off 15 things I'd have to look at on a gap up to determine, you know, whether it's bullish or bearish. And even if you say bullish or bearish, what if it pulls in for 20 minutes then goes higher? What if it pulls in for 2 hours and then goes higher? You know what I'm saying? How do you justify where you wait, where you want? Was it a bearish day or a bullish day? Sean, if you drop $3 and then come back $2.50, is that bullish or bearish? You know, who knows? Hey, Harvinder, how you doing? So, oh, to get assigned, you want to own the GE? Yeah, I like that. I like that idea. Yeah, if you're long term, I like the idea. I can't tell you where the bottom is on GE, but I mean, if you're doing that, it's not far from here probably. I like that. Sorry about that. Sorry about that. Somebody's at the door. The dog is barking. Hey, thanks, Rocco. How you doing? Are you absolutely right? I tried to track daily, well, my sense of the market started developing after looking. Well, Sean, you know what those stats can do for you is if it gets you looking at chart after chart after chart to try and figure stuff out, it may be interesting. You know, it may be something that helps you learn some stuff. But you know, like the day that you know we gapped up and crapped out, Sean. If somebody were throwing says, well, Paul, you know, in this situation, 47% of the time the market doesn't pull in more than X percent. I'd be like, who cares? You know, so what? I know what the market's going to do. I don't need you to tell me. And if I'm wrong, I'm wrong. But the statistics not going to help me. You just can't categorize things to that extent. You know, you can't categorize, and that's the whole problem with trying to over quant technical analysis. There is art involved, and you will learn that. As a matter of fact, beyond that, guys. Here's a comment that may blow something away. There has to be art involved. There has to be art involved. Yeah. Hey, thanks, Scott. I'm aware of it. Yeah. Thanks for the tip, Scott. I'm aware of it. I don't. I mean, it doesn't matter to me. Let me just pull out a monthly chart here for fun real quick on GE. remember, it's funny how people forget things. Remember when GE was the market? GE was up there over $60. GE was the US market. GE was the greatest stock in the world, run by the greatest person in the world, and you could never go wrong buying GE. Until it went from 60 down to, how low did it go? Right in there. It was about $9, $10. 60 to 10 in 2 years. But hey, it doesn't matter. It's a great company. So I'm sure somehow you make money doing that. Just a side note, sorry. Even if it's the actual trade setup, how do you trade it? Yeah, that's true too, Trader T. Yeah, even if you have the stat in your hand, and even if you trust it, you just jump in it open and hope sometime during the day you're right. Yeah. He's burning 14. Yeah, there's something down there below. I don't think you necessarily even have to hit that. You're getting. Yeah. I like the concept. If you're looking to own it, and you're getting paid money to have it put to you at 14, whatever, I think that's a cool play. Yeah, you have to go back quite a ways. All right, guys. Anything else you want to talk about? GE was a good stock, man. Well, Viper, it brings me into my thing I always say, like when I'm doing workshops for people, is, you know, true or false, as as a long-term trader, you want to own a great company, true or false? As a long-term trader, do we want to own great companies? As long-term traders, do we want to own great companies? No, it's not true. It's not true at all. No. Carmen, you already failed this one 2 weeks ago. No, we don't want to own. We want to own companies whose stock prices go higher. Greatest company in the world will hit an all-time high, and once it does that, it'll do nothing but go down, even though it's still a great company, right? GE was not a piece of garbage when it was at 60. It was a great company. The price just fell. We want to own stocks where the price is going up, period. If you want to make money, that's what you want to do, right? At least that's what I think we want to do. Okay, guys, thanks for being here. And this should be on the website later if you guys want to check it out, okay? We'll see you guys later.